Hey everyone, Rob B here with Rob D, and you are listening to the Property Podcast. And so much is happening in the property market right now. Interest rates are on the up. There's noise of a future crash. Will that happen? We are in a very privileged position now. We have a huge network in the property industry. And we're going to give you those insights and that information in this week's podcast, because it's fascinating to hear what is really happening in the property market right now.
Welcome to the Property Podcast. It's Thursday. That means that we're here to fill you in on what's happening in property, sharing what we've learned from putting together thousands of transactions over the years and now advising a multi-million pound property fund, which you can find out more about at portfolio.co.uk. Yes, what is happening in the property market right now? We're combing through the official data and pairing it with our own observations, and the answers might just surprise you. And make sure you stick around to the end because we've got a slightly unexpected hub extra for you as well.
It's a bit of a major announcement for you because we've got something completely new for you. And in true Property Hub tradition, we want to make it ridiculously valuable. In fact, it's going to be something I think a lot of you are going to be extremely excited by. Rob, you are starting a newsletter that is written entirely by you, is your opinions, and you're committing to doing this each and every week, and you're putting it out for free. Where's the cash? What's going on?
Makes total sense, doesn't it? I'm really excited about this because I haven't actually done any property writing for such a long time. And we obviously talk about property a lot on this show, but I haven't really had an outlet to write my opinions about property. And there's so much going on in the market every week. So I've decided to put together a quick email every week, which has got my opinion about what's going on in the property market right now, plus a roundup of 3 of the biggest news stories that are going on that you need to know about as an investor, and some little bonus stuff as well. This is going to be going out every Friday. If you're a Property Hub member already, then good news. There's nothing you need to do. You're going to start receiving it automatically. But if you're not a Property Hub member already, you can go sign up for this right now at propertyhub.net/news. Sign up there, completely free. And you'll get this email every week, a 5-minute read to keep you up to date with what's going on in property that you need to know about.
Well, if you've not signed up to Property Hub before, which is absolutely free to do, then I think it's become even more compelling. The first one of these will be in your inbox next Friday. So don't worry if you're listening to this a few days late. You've still got time. Go to propertyhub.net/news. And start receiving emails from a best-selling author who knows, I believe, at least he keeps telling me, a thing or two about property. So it's a great addition to what we do at Property Hub. I'm super chuffed that Rob's agreed to do it, and I think you're going to be super chuffed that he's agreed to do it as well. So go to propertyhub.net/news and get signed up now.
If I had to sum up the mood in the country at the moment, I'd probably say jittery. People are very nervous about what's going on. We had COVID, of course. Then we had a bit of a sort of a feel-good boom. Everyone was feeling relieved that they could actually get out again and do things, and everything was looking far more optimistic. Well, now that is coming to an end. Even though the data shows that everything is pretty much okay at the moment, everyone is very focused on what's going to come next. There's lots of talk about recession in the near future. People are rightly very focused on inflation and what that's going to mean for everyone. Energy bills, interest rate rises, and of course, for our purposes, the property market. Property has been on an absolutely unbelievable tear for the last couple of years, but is that coming to an end? Are all these factors that I've just listed off meaning that the property market is slowing down? Well, that's what we're going to have a chat about in this episode. We'll talk about what we see happening in the property market right now. And we'll also have a chat about interest rates and how that's likely to affect the market in the future. Now, Rob, of course, we've been collecting our own observations as we go about running our businesses day to day, and we'll talk about those. But before we do that, maybe we should look at not just our experiences, but some actual data.
Yes, because the actual data has started to be released, and we have some numbers in from July. The Nationwide House Price Index, a index that we've referred to many times over the years on the pod, has shown that property prices were up in July from June prices, but only by 0.1% month on month, which is basically flat. So over the last 12 months, it's up 11%. That's very, very strong. The most recent month is very weak for house price growth.
Zoopla has a different set of data that is showing roughly the same thing, and they've broken it down regionally and found that the rate of growth is slowing in every region of the UK. So this isn't just pockets of the country, it's everywhere. However, the rate of growth is slowing from a very high base. We've talked so many times about how mad the property market has been and how fast prices are growing. So even though that rate of growth is slowing everywhere, it's still significantly higher than the 5-year average, but the trend is downwards. So according to Zoopla, house price growth over the last 12 months is 8.3%. They predict that by the end of the year, house prices are going to be 5% higher. Now, at first, that sounds like a prediction that house prices are going to fall because the rate of growth is going to go from 8 to 5, but actually it's because they're working it out over a rolling 12 months, and some early, very high growth months are dropping out of that 12 months and being replaced with lower ones. So that doesn't mean that they're saying that house prices are going to fall. They're not. But they are clearly showing that the rate of growth is slowing, and it's slowing everywhere.
Mortgage approvals are also down. In May, we had 65,700 mortgages approved, and in June, it's 63,700 mortgages approved, so down by 2,000. It must be said that May had been the strongest month in a while. In fact, it was the strongest month in the last 8 months. So a small drop from its strongest month. So this story in isolation wouldn't really make you think too hard about what's going on, but combined with these other stories that we're looking at, it starts to build a picture. But also, Rob, transaction volumes are lower as well.
Yes, they are. If you want to pick a dramatic number, you'd say that they're down 55% compared with the previous year. But that's misleading because the previous year we had the removal of stamp duty that was about to be reinstated and everyone was trying to beat that. So there was a real glut of transactions. The real number to focus on is that transactions were 3% lower than the previous month. So again, a slowing. But again, a slowing from a high base. So that's a whole variety of official sources, and they're very useful, but it is very high level, and there is often a lag. So it can be hard to interpret this data. But Rob, we are in the fortunate position of running businesses in property and having a good overview of what's happening in the market in real time. So what are you seeing?
It's been fascinating, Rob. It's been really, really interesting. And it's been quick. So these observations were not present last month. So what I'm about to describe to you wasn't taking place a month ago. But it seems there's been definitely a shift in sentiment. And it's not just been a quiet month. Because the first thing we're observing is that our network are all saying things are quieter. But quiet enough to really notice. So we have had a boom for the first half of this year. There's no doubt about it. And even if we pause right now and call the year at this point, if we stop the data today, then we have had a boom from January to August. So when the industry notices that the boom has, at least for now, slowed down, then they're talking about it and they're telling us about it. The other interesting indicator, and possibly the bigger one, is that with Property Hub Invest, we have previously over the years, and we've been running for many years now, have worked with national developers. So I won't say their names because we are discreet with those relationships. But if you think of major house builders in the UK and names that pop into your head, they're probably the names of the builders that we work with. Now, we haven't actually worked with them for a few years. So pre-pandemic, it was a healthy relationship. They would call us, we would call them. Occasionally we could do a deal that satisfied both sides, and that would be great. But then lockdown happened and the boom started. And then, just being completely honest, didn't answer the phone when we would call them because they were so busy and they didn't need us. Well, that's changed. Not only are they picking up the phone, actually, we didn't call them because we just got so used to them not calling us. But in the last 2 weeks alone, we've had multiple developers call us out the blue and say, hey, do you want to chat about doing a deal? Now, that's great, and it's great for our invest clients because hopefully we can bring them stuff soon. But it's really interesting that their confidence has weakened as well. So a combination of our general network and our home builder network, we're getting really interesting information, which leads us to believe that we are in a slower period of the market right now. Interestingly, though, city centres, as of yet, are not experiencing as big a slowdown. If it is happening, it's not as noticeable. That's fascinating as well, because you've had different shifts in the markets where the suburbs did really well as we exited lockdown and cities were really, really quiet. And then more recently, over the last 6 months, cities have really kicked on, possibly making up for lost time. And as we record this today, there's still some decent momentum there. So it's a fascinating picture. But the thing on everyone's mind at the moment, Rob, when it comes to property and the economy in general, are interest rates. And interest rates are moving because we have high inflation. And inflation and interest rates are now trendy, which obviously has probably been led by your wonderful book, Rob, The Price of Money, and everybody wants to talk about it. Or it could be that everyone feels a bit poorer at the moment, and that's why they're talking about it. Maybe a combination of the two.
Yes, we talked about this in last week's news story, the move up of 0.5% in the base rate from the Bank of England, which has taken rates back to 1.75%. And as I said at the time, by historical standards, that's still very low. But given that they were absolutely on the floor, they're practically at zero just a matter of months ago, that is a big shift. And it has understandably rattled people, because when something hasn't changed for such a long time, even if that is a historical aberration, you just kind of expect it's going to go on forever. So it should not be a shock that interest rates have gone up from 0.5% or whatever they were before. That was obviously going to happen. But the fact that it is happening, and it's happening relatively quickly by central bank standards, is a bit of a surprise. And it is rattling people. Now, there is an inbuilt assumption that interest rates increasing means house prices falling. And logically, that makes sense. But I've actually been diving into the data, and what I found actually challenges that view if you go back and look at history. I haven't yet got it all polished to a point where I'm ready to talk about it on the podcast, but I'll aim to get there in the next couple of weeks because it's really interesting. But I think, Rob, the point isn't that interest rates are at 1.75% now. I think what's on everyone's mind is how much further will they go? And has the Bank of England finally woken up? Are they ready to do whatever it takes to crush inflation, even if that means significantly affecting the economy, the house prices, the stock market, everything? Are they going to do that? Because if they are, then I'd expect that we'd need to see some far bigger moves from here.
Well, if we base it on what they're saying, then the answer to that would be yes. But are there other motivations for them saying it? So the Fed and the Bank of England have made strong noises that they are prepared to do whatever it takes to tackle inflation, and they will put tackling inflation above the economy. So to put it in simple terms, they're prepared to compromise the economy, or some people would say wreck it, to tackle inflation. And the only lever that they really have to tackle inflation is raising interest rates. Now, they have started to do it. Will they carry on? That's an interesting conversation. And it's hard to say right now. But let's look at it today. They have raised interest rates. And that, at least in the short term, has made people nervous and poorer because people's mortgages have gone up. Whether you're an investor or an owner-occupier, if you don't have a fixed rate mortgage, you're paying more right now. You have less disposable income each and every month. And that's one of the things that the Bank of England and the Fed in America are doing on purpose. They're trying to stop people spending as much. They want to constrict spending. It's not the only thing they're trying to do, but it's one of the motivations. I think it's really interesting, and we will follow up with a podcast on inflation in the next few weeks, as Rob's already hinted at. But the spoiler is, I think you probably can tackle inflation by rising interest rates, but you will have to wreck everything on its way to doing that. Are they truly prepared to do it? Well, that's an interesting conversation, which we will have. So that's the future, but this episode is focused on the now and what's happening now. And the questions that people are asking, Rob, are we headed for recession? And if we're headed for recession, are we headed for a crash? So first of all, are we heading for a recession?
Probably, I think is the answer to that one. I'd say it's highly likely that we are. I believe the US is in recession already, although they're trying to sort of redefine what recession means to avoid politically having to say they are, because I think they've got elections coming up. The UK, the Bank of England predicts will be in the autumn. And they actually believe that the economy is going to shrink for 5 successive quarters, which is a long time. That would be a pretty long recession. However, I don't believe it's going to be a particularly deep recession. And I think that could be the key factor. Because what does a recession really mean? Well, it means that the economy shrinks for one reason or another, which means not as much is being consumed, which means companies need to lay people off because they're not needed anymore, because less needs to be produced, which of course then reduces spending further because those people don't have an income anymore, and so it goes on. And in terms of the property market in particular, that means that those people are unable to pay their mortgages, so you have forced sellers, which pushes the whole market down. We're in a position at the moment, though, where the labour market is actually ludicrously strong. This data is a month or two old, so it might not be exactly the case now, but we did have a situation where there were more job vacancies than job seekers for basically the first time ever. And we know from the hiring that we're doing at the moment and speaking to recruiters, and we're hearing it from everyone else we know who runs businesses as well, that recruiting is extremely difficult because everyone's got a job already and there's just a real shortage of labour. And it's not just at these office-based professional end of the market either. You can see it just by walking down the high street and just looking at the number of ads in windows for bar staff and waiters and things like that. It's happening everywhere. So if the output of the economy shrinks a little bit, does that undo all of that effect and suddenly mean that millions of people are going to be out of work? No, I don't think it does. So if I were to bet on what's going to happen, Rob, and this, to be clear, is not based on any sophisticated economic analysis of any type, it just seems to be kind of common sense, that we may have a recession, and it may mean that growth is non-existent or slightly negative for a relatively long period of time. But I don't think that we're heading for the kind of very deep recession that's going to have the kind of economic impact on people's lives that people probably are thinking of when they think of the word recession. But you might completely disagree.
Which would make this really interesting, but I don't. I agree. I think we are going to head into a recession and that'll be confirmed in the near future. I also think for the majority of people, it won't be a difficult recession. So that then leads into the second question. Does a recession mean a property crash? Well, my view on this is no. I don't think we'll have a property crash. So a recession doesn't mean you have a property market crash. Look at our last recession in 2020 when we had COVID. Pretty rough time, right? COVID was a very scary place. There was so much uncertainty. The recession was a deep one. On paper, it was pretty grim in terms of the impact it had on GDP. Yet property prices really weren't affected. And in fact, as soon as people could start buying property again, prices started to rise. So even if you look at the most recent recession we've had, it's clear evidence that it does not equal a property market crash. But of course, there have been previous recessions when we have seen property prices crash, like '08. So what type of recession are we having this time, and what will that mean for the property market? Well, as we've already alluded to, it's a recession that won't hurt the masses. It may hurt us all a bit, and it might not be pleasant, but the worst part about it will be the media, which is normally the case with any recession. The media will make you all scared rather than having a meaningful impact on your lives. Has the cost of living gone up? Absolutely. Have interest rates gone up and therefore people's payments gone up? Absolutely. Is that nice? No. But are we all out of work? No, as Rob said, the job market is very strong at the moment. It may have softened slightly over the last couple of months, but it's coming from a very, very strong place.
Exactly. And to tie this back into the softening of the property market that we started with, I actually view this as a good thing because people are looking at some of this slowing that we've talked about and going, does this mean that a crash is coming? But to me, this solidifies my view that a crash isn't coming. Because the way that property crashes tend to happen is that you'll have a sudden juddering halt. Everything will be going absolutely brilliantly until very suddenly it isn't. And I would have been concerned if the extreme rate of growth had kept on going, because that would have made me question my view that we have several years of growth still to go. Because you can't have prices growing at that kind of rate for that many years. It just tends not to happen. Everything gets too far ahead of itself. We've said several times on the podcast this year that we expect the second half of the year to be slower than the first. And that appears to be exactly what's playing out. I believe that we're going to see a real slowdown in the rate of growth. We thought that was going to happen anyway. The data is now starting to bear that out. But I actually view that as a good thing for a couple of reasons. Firstly, it makes me feel more confident in my prediction of what the next few years have in store. But also, it means it's actually easier to buy property. A red hot property market is great if you're trying to sell a property, and it's great if prices are going up and you've got a portfolio that you're just holding on to. But if you're in the market to buy, it's a nightmare. We had so many listeners over the last few months calling in and complaining about how hard it is to buy this, and they can't even get viewings. If they do get a viewing, there's 20 other people there. It goes to sealed bids. You have to pay over the odds. Well, if that's coming down, that's good news if you're looking to buy. And exactly the same effect that we're seeing at Property Hub Invest, we're in that finally, we've got some of the house builders calling us back again. Investors across the country are going to experience that. And that, for me, is a positive. But Rob, I know that I am a born contrarian and not everyone is going to see it this way. And already we've had lots of people getting in touch and saying, this is happening, that's happening. Does that mean that now is a bad time to buy? Well, what do you think? Is it?
Well, it depends. Is the market about to crash, and has the cycle ended early, the 18-year property cycle? The answer is no. And if the answer is no, and we're just having a pause, then far from being a bad time, as you described, Rob, it's a great time. because it has been really difficult. I've previously talked about taking any discount you can lay your hands on, because if somehow over the last 12 months you've been able to even negotiate 1% off the fair value for the property, then you've done incredibly well, because most people were overpaying. Does it mean now you can get deals of a lifetime? No, because so much has been sold and people are used to a certain price and the market isn't crashing. But can you get a bit of a discount now, whereas previously over the last 12 months you couldn't get anything? Yes, I'd say you might be able to get a little bit of a deal now. A little bit. What you have to accept, though, is that yields have reduced. Yes, rents have gone up in a lot of areas, but so have property prices, and interest rates have gone up as well now. So your return, your ROI, if you like, on the money that you invest will have reduced. But if you believe in the cycle, which we do, then you will see good growth over the coming years, and that will be more than made up for. But the market has been sprinting at full pace now for 18 months, and having this pause is welcomed. I mean, Rob, it's nice for us just to have that pause, for personally and professionally, just to have it slow down, because it's been incredibly intense.
Yeah, it's been a heck of a year so far, and on many levels, I could certainly deal with the end of the year being a little bit quieter. And yeah, on a personal investment level, I'm buying a property right now. Might talk about that in the coming weeks. I'm intending to buy more and actually feel more confident about making the investments that I want to make now, because some of the heat is coming out of the market and it's actually going to be possible to get in and do some of the deals I want to do. So lots wrapped up in that conversation and lots to come back to as well. This whole economic situation is great news for me, because finally people want to hear about inflation and interest rates. And there's loads more to get into on this. We've been diving into some data, as I referred to earlier, so we'll be talking about that in the coming weeks. So do keep on listening. Make sure you're following the show, whether it's on Apple Podcasts, Spotify, or wherever else you listen, so you get every new episode sent automatically to your device every Thursday morning, because there's going to be some topics coming up that you won't want to miss. Let's wrap up this here episode of the Property Podcast with Hub Extra, the part of the show where we give you a little bit more. It could be a resource, could be a tool, could be a book, could be all manner of things. What's it going to be today though, Rob? You promised us something random. What is it?
Well, I think it matches up with my tough northern image. I'm going to recommend musicals this week on Hub Extra. I think we have something absolutely incredible in the UK, and we have this incredible industry, and that is the West End. And actually not just the West End, but just theatres across the country. We're lucky that this country seems to be stacked with talent, and it's incredible talent that we should all get behind and support. They've had a rough few years with COVID for obvious reasons, and it's great to see people going out again. But if you've not treated yourself, and it is a treat, it's not something you can do every week, but if you've not treated yourself to a musical or the theatre in general for a long time, but whenever I've been, I've always enjoyed it. I went to watch Matilda recently, and I was blown away with the whole thing. The show itself, the music, the talent. It was just absolutely incredible. If anybody's listening who's connected to that show, well done you. Matilda's absolutely fantastic. Last year, I went to see Mary Poppins again, showing how tough I am here. And that was absolutely incredible as well. So if it's been a few years since you ventured out to the theatre, whether in London or locally to yourself, give it a go. Support that industry. It's a wonderful industry. We don't want to lose it. And there's so much talent there. So get along, support it. And I promise you will not regret it.
You know what? I've got a vague memory that we actually do have someone listening who's connected with Matilda. I've got this memory of someone emailing me ages ago. So if that was you and you are still listening, do get in touch, just because that'd be interesting. And also, I quite fancy seeing the ABBA thing with the projections or the virtual reality, whatever it is. It's supposed to be amazing. So if anyone feels like offering us tickets to that, then that would be cool as well. But yeah, Rob, I think that's a really good shout. I haven't been to anything like that for a long time. And I'll now peruse some listings as a result of your endorsement.
Well, that's us done for another week. Make sure you're subscribed to the show, because as we've alluded to, we're going to be covering this topic in more depth in the coming weeks. There's so much to talk about here, and let's face it, it impacts all of our lives. Hopefully like Ask Rob and Rob does as well. Maybe not in as a big and meaningful way, but hopefully in a nice, small, positive way. So make sure you join us on Tuesday for Ask Rob and Rob. And make sure you're here on time next Thursday for the main event, the Property Podcast. Until then, take care. Bye-bye.
Bye-bye.